each day we get a new set of economic numbers that paints a picture of the health of the economy. The jobs numbers last week certainly less than favorable, but today the Institute for Supply Management report showed service industries expanded in September for the first time in a year and returned to growth after 11 months of contraction. The ISM's index of non-manufacturing businesses rising to 50.9. That was also higher than forecast, and also a sign that the emerging recovery is spreading from housing and factories to the broader economy. That ISM report helping out companies like Nordstrom, also Limited Brands, and other service-related companies, Starwood Hotels, and also Target doing quite well. And banks, those were the biggest gainers in the S&P 500 after Goldman Sachs recommended buying those large banks after saying that the big banks will outperform regional lenders. But the big question is, where is the market headed from here? Well, New York University professor Nouriel Roubini telling Bloomberg over the weekend that markets have gone up too much, too fast, and too soon. Remember, Roubini was one of the first to predict that the credit crisis and the recession. And so that's just one viewpoint, but a team at Credit Suisse issuing a report on Monday saying it's no time to sell equities because they believe the S&P 500 will be at 1,100 by the end of the year. And of course, we are right on the verge of finding out how companies are going to be doing for the third quarter. This week, those third quarter earnings start in earnest. Alcoa reporting earnings after the closing bell Wednesday, and that'll be the first company in the Dow Jones Industrial Average to report those third quarter numbers. Money managers are betting that the long stretch of falling profits will end in 2010 when net income of companies rises by 26%, followed by a 22% increase in 2011.